Welcome back. One fintech company is giving entrepreneurs the best chance to succeed during challenging economic times in South Africa. iKhokha has given over 2 billion rand in working capital to its SME customers. The fintech company allows entrepreneurs to accept both in-person and online payments while offering access to working capital. For more on this, we are joined by Matt Putman, iKhokha CEO. Matt, thank you so much for speaking to us here on Newsnight this evening. Could you just tell us broadly what essentially iKhokha does?
Evening, Anli, and thanks for having me on the show. As you very correctly pointed out, iKhokha really offers SMEs in South Africa access to the digital economy. So businesses from, grassroots level up to more formalized businesses, we help them accept card payments, whether it's in person or online. We help provide working capital so that they can grow their business. And we provide a suite of business management tools so that, the small guys are able to compete in this rapidly changing digital economy.
So 2 billion rand is absolutely staggering. What makes your funding model able to sustain such a large number of disbursements?
Well, I guess it's a very different model to the model that traditional banks have used to try and service this SME space historically. So we work in partnership with Retail Capital, which is now a division of Time Bank, and we look at the raw trading data from SMEs. So we make decisions on how much to lend businesses and what the right custom offer will be based on just 90 days worth of raw trading data through that business. And it's all digital, it's all self-service enabled. So an SME will get a custom working capital advance in their iKhokha app. They'll kind of click 2 or 3 buttons, and within 24 hours, they will have those funds in their bank accounts. And that's, really why we're able to distribute the funds at scale and do it in a space that, traditionally is a space that banks have managed to, or haven't managed to make work successfully.
So you're playing a major role in bolstering the SME sector. Some might say the risk is just too big, that SMEs won't be able to make repayments on those working capital loans. Why do you feel the risk is worth it?
Well, I guess for us, it's really based on data. I mean, we've been doing this now for somewhere between 5 to 6 years. We started very small with Retail Capital, with, a very tight risk appetite. And we've just been, incredibly happy with how the portfolio has performed. And we've seen, SMEs, 80% of them won't get traditional loans from traditional banks, but they really need this working capital to either, hire new staff, buy additional stock to be able to sell more, expand premises, etc. And we found that we have a very low default rate on our book. We have a very high repeat uptake rate. So SMEs will, pay off a cash advance over kind of 7 or 8 months. And then they will take another advance as their business continues to grow, and they use this capital really to fund their growth.
How do you select which SMEs to work with? Do they apply to you like, anyone would do it to a normal bank for credit? Do you also go and look for those absolute blinding businesses that are really, a hot ticket, but they just need that little bit of a push to help them get over the edge?
So, it's all done really in the background. There's a huge data modeling engine that will analyze data in real time across, tens of thousands of SMEs that are trading on a daily basis in South Africa. And it will start as small as someone who is looking to, borrow 2,000 or 3,000 rand, maybe to buy an extra day's worth of stock in a spaza store, right up to a big retail or hospitality or hair and beauty business that needs up to 1 million rand in working capital. So we look at the raw card payment turnover of these businesses, and in real time, the engine is kind of spitting out offers that we know from previous track record will work for these specific businesses. So the offers are very broad. starting from kind of single-digit R1,000 right up to R1 million in an advance. But it's all done in real time digitally through the iKhokha mobile application.
What's your long-term vision for iKhokha?
Our long-term vision is, first, I think, in the South African landscape, and listening to the news tonight, there's obviously a lot of gloom and a lot of things that aren't going right, in our economy. But we believe that we have a very resilient small business sector, and there are a lot of people who are working really hard, to create jobs, to create a positive momentum in our country. And we believe if we can provide them with a business management platform to help them, move from being cash-based businesses into this digital economy, give them the tools they need to run a business, and really use iKhokha, I guess, as the operating system that you need to kind of start, manage, or grow your business in South Africa. We think that, if we can bring somewhere, between 1 million SMEs onto this platform, we can fundamentally improve the outlook of the economy. So I guess that's very much our South African hat and our South African ambition. But beyond that, we believe that in other emerging markets in Africa and Middle East, there are small businesses who could benefit from the technology we've built in South Africa, and our goal would be to expand to the right markets at the right moments, while still investing very heavily in South Africa and hoping to be a key part of getting this economy back on track.
So iKhokha is actively growing the economy. It's something, as you said earlier, that bigger banks or perhaps even government funding models haven't been able to quite get right. How do you think they could better come to the party to support SMEs?
I think what we've learned over time is that partnerships are probably the best way to do that. So we've partnered with banks in the South African landscape. So Bank Zero, which is one of the neobanks, you'll probably be aware of them. We also partner with Investec, where we bring I guess a very specific, deep offering for SMEs that Investec benefits from taking to their customer base. And then we also partner with TymeBank, to provide the working capital, but we're also looking to provide our acceptance offering to their business banked customers through tap on phone functionality. So I think that the key is really to partner with players like ourselves where possible and where there's a good fit and services are complementary, and that's how we've worked with banks. Funding the balance sheets of this lending piece and bringing lending expertise through the retail capital division of the business. I guess that's a great example of a bank and a fintech working very well together, where iKhokha is able to provide that SME interface and distribution, and it works quite well. From a government perspective, I think it's again probably about partnership. It's not something we've seen anyone get right in this market, but we're still hopeful that can happen in time.
Incredibly encouraging to see iKhokha getting that right to this degree. Thank you so much for speaking to us. That was Matt Putman, CEO of fintech company iKhokha. Now, producer price inflation is expected to increase slightly. That's the expectation of